right? You know about this idea about growth versus value. This has been in the debate where a lot of people keep bashing like value investing is underperforming the growth stocks for the last 10 years, at least in the US, right? So he's asking, do you see value ever coming back to beat the growth stocks?
This is a very good question. In fact, we send this short notes to all of our clients. Value investing versus growth investing. Okay, if you look at our calendar, we actually mentioned a few things. In the past also, we say no investment guideline will work all the time. That's very important. Huh? Yeah. Now, value investing also don't work all the time. So is growth investment don't work all the time. Okay, doesn't work all the time, but it works if you know how to make use of it. Give you an example, like what you mentioned. Value investing seems not working because there's a lot of low PE stock and all these things. But you realize that in November and December, just 2 months ago, many of the value stocks start running very fast, performing very well, So then sometimes it's very psychological. When people start saying that value investing is irrelevant, it's not totally true. It doesn't work all the time, but it will work. It's a matter of time. Growth investing also doesn't work all the time. Give you an example, when tax bubble came in 2000, what happened? All the tech stock go down for 2 years, 3 years in a row. Yeah. So also doesn't work all the time, but it can work some of the time. So what is the ending story? Your analysis is important. No one investment guideline work all the time. Okay, is that a good answer?
Yes, very good answer. Okay. Yeah. Next question from Elmer again. He said that what is a typical accuracy rate that your team pick? Like every out of 10 stocks, how many are eventually no wrong decisions or mistakes? I guess he's asking because
to answer your question, as a fund manager, you make mistake. You don't say, if you go and tell people you don't make mistake, it's a joke. That's why when I wrote my book, I mentioned that, we make some mistake. We buy a shares which they are not so nice, telling all kinds of story, suspended, go to zero. We make mistake, but the key, don't make big mistake. Because if you very heavyweight and you make that mistake, or it gonna hurt you, don't make big mistakes. So sometimes that's why when we buy share, we buy 1%, 1.5%, goes up further, we increase it, We seldom one shot, we make 5%, we seldom do that. Because we need to study a bit more. Now, when the crash comes, it's slightly different. Because those companies has been around for a long, long time. So we may do a bit more. But our strategy, we don't go and invest in any company up to 5% of my portfolio. A lot of time, 2-3% enough already. So the guy go 3-5 times, it become 10-15%, Yeah.
Okay.
Okay.
Yes. Shall we have one last question from the crowd? Later, I still got one more question. What are your views on the European market in the next 5 to 10 years? Because we have been talking about ASEAN, Asia, and US, right? What about Europe? Is there any future?
Let me share with you. Last year, I have a lot of problem because last year, we make good money, double digit for ASEAN market, but we underperformed the index, but also underperformed Europe and US. And I remember I was not too happy, their negative interest rate, you make 16% for them, they're not happy because the index to maybe 19, 18, The long story short is that European market is not cheap. they also follow US. They are very expensive. Okay lah, let's not go into that. They are not cheap, they are expensive, and they don't have the earning growth that can justify in many of the companies. So I'm a bit concerned. But because they have a lot of money, so they continue. You see, when you go there and tell them that, look, my market dropped so much, and Asia will grow more than you, more than US, more than Europe. You should come and invest here. But sometimes they don't come because precisely everybody do that. So your ASEAN market sometimes also not performing well unless your stock pick is good. So if you are a fund manager, they believe that you have the capability to pick stock, maybe you have a chance now. Other than that, actually, Europe is almost, the same as US, Your market, your PE is not low, your market is not cheap, but your earning growth is, you need to monitor their earning growth. The problem always comes is when your PE is so high and get higher, but the earning growth is not there. That's a sign of having problem,
Mm-hmm. Okay, so
but no, I'm not saying that all Europe. I mean, I don't cover Europe. I just study a bit here and there. But if you can find a company that meet like our criteria, low gearing, growing, new management coming in, new product coming in, then you should go and buy them.
Case by case basis.
Yes.
Okay.
And almost like that. You although like for example, you say, oh, Indonesia is cheap, but you pick the wrong stock, you got problem. Then you say, oh, okay, like you say Thailand is a bit more expensive. You can say that, but then you pick the right stock, you're still doing very well. Yeah.